Thanks for watching this quick video, a little bit of an introduction of the PassiveInvesting.com management team. With us right now, we have Brandon Abbott. We also have Danny Rendazzo and myself, Dan Hanford. And we wanted to kind of go around a little bit and talk to you a little bit about what our different roles are and what we do for you as the management team, so you have a little bit of a better understanding before you and I jump on a phone call and discuss your investment goals. So let's get started and talk to Brandon a little bit and talk to us a little bit about what you do as far as the acquisitions process on these large apartment communities.
Sure, Dan. So my role is really speaking with the brokers, looking at properties before we get real deep into the deal. So I like to actually go to the property, see what we're working with as far as the structure of the property. What's the condition of the roofs like? What's the siding look like? Where's the neighborhood located? What's the submarket look like? I also use technology that I used in my background with insurance, such as drone inspections to get up and check the roofs so I don't have to carry a ladder around with me. I can just shoot the drone up. I can take photos and video of the property from a bird's eye view, check out the condition that most people can't. I can also go up above the property and kind of see the surrounding area and get a good feel of the submarket, the micro market in that area.
One cool thing that I love working with Brandon on from a numbers perspective, which I certainly appreciate, the ability of the drone to get the roof measurements. And that way we can get, if there's any sort of replacement cost or damage to a section, we can get it estimated really quickly to analyze the deals and make sure that we're tracking everything and we're not going to miss any, renovation cost that needs to be planned for well ahead of even submitting an offer.
Yeah, that's a great point, Danny. The software that he's talking about is telemetry software, so I can either pull satellite telemetry or use the drone if there's no satellite view, and I can actually pull exact measurements for an entire apartment complex. We just did one recently, had 11 structures on it. I didn't pull a tape measure out once. It all imports into my software. I can run macros on that and estimate out a roof estimate. $300,000-$400,000 roof estimate in about 10 minutes.
Well, and the nice thing about those roof estimates is that they're local. Like that, you can when you press that button, they're taking the local labor rates, the local material rates, and not just on roofs. And when we're doing interior renovations or any other types of exterior renovations, we can get down almost to the penny of what it's going to actually cost us to renovate the property. And in that pre-LOI, that pre-letter of intent phase, before we actually put an offer on a property, we can pretty much know before we get into it what is going to come up during the due diligence process, where we go in and have a lot of these lender inspections to see, are we going to have to put back reserves for replacing roofs, or are we going to have to do something with the plumbing or various things like that?
Yes. All part of my portion of the acquisition process when we're looking at a deal, deciding whether it's something that would be a good investment for our group.
So, go ahead.
I was going to say, and so, going on with Brandon's kind of due diligence and the acquisition process of actually inspecting the property, getting a very good understanding and estimate of the condition for that asset, then I kind of take over and analyze and underwrite the deal to make sure that it's, number one, a conservative deal. So what do we mean by conservative? Well, we analyze the market to make sure that market rents are going to be where we expect them, or even a little bit below where we expect them to be based on the competition, taking into account the renovation that Brandon and his team are going to implement. So we always look at that market analysis. We always take into account our renovation budget and scope. In addition to that, working with our lenders, I can estimate what our loan terms may be in terms of debt proceeds, our loan to value ratios, also the interest rates, the amortization, and any other sort of lender terms that we may have to make sure that our deal is conservative and that we can meet our investor goals.
Well, and talk a little bit about some of the criteria that we look for when we're underwriting a property or doing that financial analyzing on a property, that it has to hit certain criteria in order for us to actually move forward and even present an actual offer to the broker or to the seller.
Yeah, so from the highest level, we look for properties that are built between 1980 and the mid 2000s, probably around 2010, and what the property must have, it must be a value add opportunity. And so what value add means is we can go in and buy the property, invest capital to renovate the property, and increase the amount of income that it generates. So most frequently, we'll buy an asset that has dated or vintaged interiors, and we'll add new countertops, new cabinets, a new kitchen, new appliances, and increase the amount of monthly rent that a resident would pay, ultimately increasing the income. That's that value add component. And so from the vintage to it must being a value add component, we also look at the size, and typically most of the deals that we invest in are 150 units or greater. And so by hitting those high level criteria, what we then do is do our conservative analysis and underwriting of the numbers to make sure that we can hit our target IRRs, our target preferred cash on cash return for investors, and as well as look at the annual return that an investor would make.
And as far as, go
I
ahead.
was going to say, the other portion of that, so we talked about my portion, kind of the property, and looking at the bones, if you will, of the property, and then the financial analysis of the property. And then Dan, what's your portion in this team? We like the three-pronged approach to that. So structure, financial analyst. Tell us about your role in it.
Sure. So my role is primarily from the investor relations standpoint. So you and I will be jumping on a phone call here shortly and discussing a lot more about you and your investment goals and your background, and see if our properties and our acquisition process and our investments are a good fit for you. One of the things I want to kind of shift back a little bit to Danny on is talking a little bit about some of those return targets, because I know I'm going to have some conversations with our investors here that are watching about some of those returns, and looking at it from an IRR standpoint and cash on cash and equity multiples and various different targets like that. You definitely want to have a conservative approach when you're underwriting, and it's great to have the team that we have because we balance each other out. Danny's a very conservative underwriter, and Brandon and I like to kind of push him a little bit, but it's good to have that balancing so that you can make sure that you can acquire properties and still hit those return targets. So what are some of those return targets that we're actually looking for? I mean, obviously every deal is going to be a little bit different, but what are those kind of like ranges that we're looking for our investments?
The first return that is most important is our preferred return. And when we purchase value add apartment opportunities, we're buying existing assets that cash flow. And so we're able to hit, typically we like to target an 8% preferred return in year one. And so what an investor can expect is on a $100,000 investment, they would make in cash in their bank account, go buy groceries or go on vacation, they would make about $8,000 in the first year as a preferred return. And the returns do vary from years 2, 3, and 4, and 5, but we target an 8% preferred return. The IRRs that we target are somewhere around 15 to 18%, kind of the mid to high teens. Some deals, if it is enough value add component, could even be above 20% IRR. From the annual return perspective, we would have similar kind of mid-teens to high teens annual returns, or ROI, for investors. And a big question that I always get from investors is, what is my actual total return on the deal? And that term is actually called the equity multiple. And so most of our deals are typically around a 1.75 to 2 equity multiple. And what that means is if you invest $100,000 and we have a 5-year value add hold, your total return would be $175,000 or $200,000, meaning you're going to double your money if it's a 2 equity multiple over the course of the deal.
Well, and one of the things that we always have to consider is that every deal's a little bit different, and market conditions can change. So right now, those are our criteria, but they might be a little bit lower if the market kind of gets even better than it is right now, or if the market softens, they might get a little bit better. So it's always one of those things that we're constantly monitoring and constantly checking to make sure that we're acquiring properties at prices that allow us to be able to implement that value add that Brandon's really working hard to do and budgeting for, and then working with Danny, making sure that it actually hits the numbers that we're looking for as well. And we are constantly analyzing deals and putting projects together to kind of see are the numbers going to work, and then submitting those LOIs to see if we can actually get those and acquire those properties. And most of them we don't get, so we spend a lot of time before we get a property looking at multiple properties and going through different phases and spending 4, 6, 8 weeks actually doing that process of that acquisitions and not even getting it. So whenever you get a deal across your email, just remember that there's been multiple deals, sometimes dozens of deals that we've looked at before it actually comes across your email, and we've been cherry picking these ones to present to our investors.
Absolutely.
Well, thank you so much for taking some time to actually watch this video, and looking forward to jumping on a phone call with you and discussing your investment goals. And feel free to write down any questions you have before our call about what you heard on this video. I'd love to be able to answer any questions you have, and looking forward to having you invest in one of our properties.